The best way to trade supply and demand is to put this template in your head. This is the template behind everything, every supply and demand there. Okay, today I'm going to show you how to identify institutional supply and demand in the market, how to trade them, which supply or demand zone is valid for trading. All right, and the idea behind the supply and demand. Okay, so this right here is the template you have to put in your head. All right, now let me show you. Look, any impulsive move in the market, look at any impulsive move, just look into the market right now. Any impulsive move, now look at this place. Anytime there's a massive drop, price will actually form a base before the drop. Look at this place, there was a base around here before price tank to the downside, before price drop from there to the downside. All right, so you drop to this place, push up, and now it's dropping. Now anytime supply and demand zone forms, there has to be a base in the market. So the move started from here. Before price got here, there was a base like this before the drop. All right, so this is the idea behind that. Let me show you. Most of the time price will push up like this and then consolidate a little like this before an impulsive move to the upside. All right, this right here is what we call base. Down here, this right here is what we call base. Okay, this is what happens before price move to the upside or to the downside. If this happens, we are saying price is trying to gather energy before it push up. Big institutions will try and place their trade from here to the upside, and because they trade in large quantity, they can't take all the positions. Okay, so most of the time they will track price back to the place they took their initial entry and now take the trade from there to the upside, because they trade in higher quantity. All right, so this zone is what we call a supply zone. That is the zone that big institutions take trade and they pull price down there again and they take their buy from there to the upside. All right, so in the near future, let me delete this one. So in the near future, they will attract price back into the same zone and take the trade from there to the upside. All right, so anywhere there's a sharp move, there has to be a base before price move. Okay, so look at this area. All right, in the process of this zone forming, price will try to take buy side liquidity and sell side liquidity. All right, we all know buy side liquidity is at the top, sell side liquidity is down below here. Okay, so price will take them and break the zone from there and push to the upside. So when you look to the chart, you realize that anywhere there's a massive push, price has to form a base before the rise. Look at this place, there was a base before the massive move to the upside. All right, this area too, there was a base before the massive drop to the downside. All right, so this is how to spot supply and demand. All right, anywhere there is a base, you can see this place too, there was a base before the impulsive move. We are just looking to the chart here too, there was another base around here, right, before the impulsive move. Okay, so price will form a base like this. You can see there was push up, price form a base before the drop. All right, so this whole area here is the base before price drop. All right, so what do? You take the zone, that is the zone that created the base, you extend the zone like this. Let me deepen this line right here. Okay, all right, you extend the zone like this. Okay, for this zone to become your supply zone, because it is the zone that was created before price push, that is before the positive move. All right, so you extend your zone so that in the near future, if price trade back into the zone, you look to take your trade from there to the downside. All right, and what makes supply and demand valid? If you want to know that is it valid, all right, let me show you right here what makes it valid. Let's say if price is pushing up like this, up, down, up, down, up, down, up. Okay, and there is a strong supply zone here. Okay, what makes this zone valid? There has to be a case that if price is dropping, all right, the move should break a low like this. This move should break a low. So if price push like this, push up, push down, break this low here. Okay, that is when we say there has been a valid supply zone. Okay, so any supply zone, this supply zone right here, if it's valid, that means it has breaking structure. Okay, it has breaking a massive structure, that is price has breaking a previous low. Okay, So let's say this low here, price take this low, price take this low. Okay, that will make this zone valid. All right, if price get there, it is going to react. Why? Because there has been a break of structure, that is price break the low or change character. That will make this zone very, very valid. And if price get there, you look to take your trade from there to the downside or to the direction that you're trying to trade. All right, so how do you take the trade when price gets into your zone? That is when, so from here we're gonna go to the example, from the chart example, that is top-down analysis. We're gonna follow these steps, then we go through top-down analysis. Okay, so take your time. So how do you take a trade when price, let's say price push into the zone like this? How do you take a trade? That will take us to the template that I showed you earlier on. Okay, so let's go to the template. If price gets into your zone, that is your supply zone like this, price trade back to your supply zone like this, how do you take your trade? So this is the template that we're going to be using. Okay, this zone right here is our supply zone, sorry, our demand zone. So this is the demand zone that price has traded to. Okay, let me change the color. Okay, so this zone is the demand zone. You can see this is the impulsive move, price consolidated around here. So this is the base before a push. Okay, so there has to be a push, a base before a push. Okay, and then price will retrace back into the zone. All right, so now price has retraced back into the zone. We are looking to take our entry around this place. This place is where we want to take our entry. So this is where we are looking to take our trade from here. Okay, how do you take your trade from this area? And we come to the big box right here. Okay, so everything that is happening here, all right, it is the retracement here. Okay, so this is the big picture and this area is the smaller picture. Okay, so now anytime price is coming to the zone, it will be creating lower highs and lower lows. Let me show you. It will be creating lower high, lower low, lower high, lower low. So what you want to see is price should get into the zone, that is this zone, this area here, and change character, that is break the high. Okay, this is a low, a low, a low, this is a high, high, high. Okay, and this is a high. We want to see price push up, break the high, and come back again, tap into the PDRA. Okay, so you take the trade from the PDRA on a smaller time frame. It can be the order block, fair value gap, mitigation block, mitigation block, or whatever zone that you used to take your trade. That is where you're going to take your trade on a smaller time frame. Okay, so this is what is happening in the bigger picture. You scale down to the smaller picture and look for the entry like this based on your PDRA or your key entry. All right, so now let's go to the live example and let me show you how we came by with the trade just like this. All right, guys, so this is an example and this is an Euro NZD trade that we took. Signal was sent to Telegram. So this is actually a demand zone that price has tapped in. Okay, price came tap into the zone. So I was telling you that if price is retracing, it will be creating lower highs and lower lows. Okay, like this into the zone. All right, so let's minimize this one. So we want to take a trade from here. So we go down to the 15 minutes, look for change of character. So in the 15 minutes, we saw price push up, down, push up, down, break this high here. You saw price break this high here. Okay, so the change of character happened around this place, and we saw price retrace down again. So this was the change of character. Price retrace down to the key area here, that is the demand zone. That is the other block that led to the change of character from there. Okay, so it was this zone that led to this break of structure here. Okay, price retrace down to the zone, and it was an entry around this place. Stop loss was below here, and TP, we are targeting the overall high. You can see how massive price is going. We are targeting this high here. Okay, so this is exactly the same template that I show you. All right, this is how to trade institutional supply and demand. All right, so guys, subscribe to the channel, comment if you have any question, like the video, and I'll see you in my next video.